Hey guys, it's Bromos and welcome to my YouTube channel. In this video, I'll be going over the basics on how to read candlestick patterns in terms of what they mean and what we can get out of them. Most of you guys are probably thinking, Bromos, this is elementary stuff. I came here to learn how to trade stocks. Well, we all gotta start somewhere, right? I will be making other videos on topics I've studied in order to become the trader that I am today. I'll be putting all these videos in a playlist so that you guys know which video to go to next. That is why today's video will be a brief introduction. I won't be going into too much here. After this video, the real learning starts. Anyways, let's get started. First off, what is a candlestick? A candlestick represents the price action of a stock. This can be represented on any time frame, like the daily, weekly, or monthly. Candlesticks can be added together. For example, 5 candlesticks on the daily makes up 1 candlestick on the weekly chart. That is something you don't really need to worry about. I just thought I would put that in there for fun. A candlestick pattern only tells you the open, close, high, and low of a stock price. The reason that people like learning Japanese candlesticks is because it helps them predict where the stock will move in the future, based on the supply and demand. If anything I said doesn't make sense so far, then don't worry about it because the only thing that you need to remember is that the candlesticks illustrate the price action. Now let's take a look at some examples. Here we have 2 different candlesticks. The green candlestick is considered bullish because its close is higher than its open. In other words, the buyers took control in the situation, showing that the demand is high. The red candlestick is considered bearish because its close is lower than its open. This means that there were a lot more people interested in selling this stock. Let's take a look at some other examples. These candlesticks are not that different from the other ones I've previously shown. The only difference is that they have a high and a low. Now what does that mean? It means that at one point the stock was at that area but ended up moving away from it. These last 2 examples are basically the same except that they don't have a high or low depending on which one you're looking at. Some of you might be thinking, how can I use this to my advantage? Don't worry, I will cover that in a different video because the point of this video was to give a brief introduction on how to read them, which I will briefly go over again in other future videos. So in other words, all I want you guys to know is where does the stock open and where does it close? That's all you need to know right now. Now, in this, this is just a brief example of what the pattern is showing right now. In this graph, we can see that the first 3 candlestick patterns is bullish and that the demand is pretty high for this. But as soon as it reaches the top, it starts to go down with the last 2 candlesticks. Some of you might be asking yourself, well, how do I know when the stock will start to go up or down? The answer to that is by using technical analysis. What does that mean actually? It means using previous chart data and history to make an educated guess and in terms of what's going to happen. I'll be covering that in the remaining videos of the series. That is the end of the video. If you guys enjoyed the video, feel free to drop a like or comment below and hit that subscribe button to receive notifications on my next videos. Have a great day, friends, and hope to see you again real soon. Take care.